Hello, and welcome to What I'm Buying This Week. This is the Unemployed Value Degen. And wow, it has been a January. It has been I think I'm not just saying this to brag, but I think my own account I only had one red day of the new year so far, and that is a wild run, and it makes me nervous that things might be getting close to pulling back. Now we're not in extreme greed, although there is a Bank of America bull bear sentiment indicator that comes up a little bit more in the extreme greed territory. We don't have to have an imminent pullback, but it is starting to be a lot of chatter about people thinking one's coming. And even if there is, it doesn't have to affect small caps the same way as the S&P 500. But I always come down and I check junk bond credit yield spreads, and I mean they are at nothing. You know, it's hitting almost record lows at junk bond credit spreads, which means that nobody in the credit analysis world sees bankruptcy risk for on the horizon. So the you almost always see a spike in yield spreads before a recession. And the argument now is maybe so much of this junk is hiding out in private credit that we won't see it this time. And I'm not sure how true that is, because private credit, I'm not convinced that they're the suckers at the poker table when they can pass on the worst stuff to the Kentucky Teacher Pension Fund or somebody who typically is the patsy at the poker table. So no recession on the horizon from yield spreads. The safe haven's been, gets into the 10-year treasury, which I can take a peek at. I don't have it up at the moment, but it's been bouncing between 4 and 4.25 for a long time. Up a little bit recently. Not wanting to show me anything. Okay, well, we'll look at the 10-year. There we go. Yeah, I mean it's slightly above the channel that it's been in. That could be a little concerning. Let me zoom out here. Go to the 5-year. Go to the 1 year. Yeah, it is. I don't know at what point the 10-year treasury would start to weigh on the stock market. But this is worth paying attention to. Does Friday have a geopolitical risk aspect to it? I have to remember what took place on Friday. Friday was a red day. You did have a sell-off kind of generally in the market on Friday. I forget what geopolitical events took place on Friday. I don't know if this is a temporary spike or worth paying attention to. If the 10-year treasury yield breaks out and starts heading toward 4.5, that would put pressure on the market. That could give us a 5% sell-off, like a lot of people say is coming. I thought we were going to be more range-bound on the 10-year treasury, but we'll see. The narrative still hasn't gotten out that the deficit has been shrinking, and I don't know when the narrative will get out that the deficit's been shrinking. People think that, there's tariffs. After the Supreme Court spent 2 weeks not reporting on tariffs, the rumor now is that the tariffs are going to stand. And I think people thought that the market would rally on tariffs getting overturned. And I think the opposite is true. The market wants certainty. They just want to make plans and go forward. Businesses want to deploy capital. And now it seems to be the consensus is that the Supreme Court, after punting twice, is probably not going to overturn tariffs. So we'll have to see what happens. I'm not sure what's driving the small spike in the short term, but yeah, if it makes a break to 4.5, we could get that 5% pullback in the S&P 500 easily. A 5% pullback in the S&P 500 happens just about every year. I think 94% of all years has a 5% pullback in the S&P 500. I mean, it's early in the year for it, but people are already worried. Yeah, the 1 month has a small cap outperformance aggressively. The 3 month, look at that beautiful 3 month sector performance. Small value up almost 12 percentage point outperformance over large growth. I mean, this is it's practically heresy. I mean, for 3 years it's been large growth and nothing else. Now you